He
I don't know. I didn't even hear what you said because it broke up.
I
Like
said
the
over here, the New Yorker thing. Go ahead.
Oh yeah. Nice. Jay, before we actually get going today, this is a weird one, but what is the weather like up in Toronto? Because it is unseasonably warm here. I mean, like 40s and 50s in December is weird.
40s and 50s. What's that? Celsius or Fahrenheit? What is that?
That's
Let me
Fahrenheit.
so it's 50 right now. Sorry, let me put that into Celsius. So it's 11 here right now. And
Oh,
that's
that is.
really yeah, that's warm for December. I know we're going to be talking about
He
crypto and
came on with a beanie though, so you know that's chilly.
yeah, he had a beanie on before he put on his headset there. So
Yeah.
anyways, I can obviously look at my app, but I figure I'd rather ask you the guy in our forecaster on the ground.
It's pretty cold here. And dark as well. Like, I think the warmest I've seen it recently is 5 degrees, but then I've definitely seen some -5 degrees days as well.
What in the world? That's nuts.
But even at 5 degrees, which for people who are on Fahrenheit, not Celsius, it's about 40 degrees. That's pretty seasonably okay. I mean, I don't know. Growing up as a kid up here, it was
No.
like 20 degrees by now. Below probably 20, not 20 degrees, not 20 degrees below, but 20 degrees or below that. Especially with the wind chill because we're on the water. I know that these are numbers that Grant doesn't even like, his brain doesn't even calculate, but
No, I'm
we'll
trying to go
eventually talk about,
like what's 26 what's 27 degrees Celsius, because that if it gets cooler than that, like there's a problem. Like I'm walking around in my short pants for some people in the
that's
world.
78 degrees. That's 77 degrees Fahrenheit.
Yes.
You say
If it's
below 70s, it's too.
yes. Yes. Yeah,
Nice.
man.
Dude, basically what Grant just described to me is he's an actual reptile. Like he actually will lay out on a rock and get
I'm a
heat from
lizard
like the earth.
people. I am the
Yeah, not just a
conspiracy
lizard
theory.
brain. You are an actual lizard person.
it,
Anyway,
so before we get into too much, how are your World Cup teams doing?
um,
Morocco?
Morocco went. I actually made 28 bets before the World Cup, and I can go get all the slips. I drove up from Massachusetts up to New Hampshire to make bets, like the degenerative like the degen that I am. And it's funny
Degen
actually.
footy.
Yeah, and it's funny the bets I made on the World Cup are probably like like way less degenerate than like what most people think of NFTs and crypto. So I guess that's more like mainstream. Everyone knows someone that probably deals with gambling. So um,
Oh my God, yeah.
the bets are not panning out right now, but I have a couple
No.
long-term bets for the winner and other stuff. So we'll see. It's been fun. The World Cup's a good time. Hopefully you guys have been able to catch some games. Have you guys been watching games at all?
My wife will like scare the shit out of me now and again and be like, "Oh my God." And I thought we were watching a movie together. She'll scream from the other side of the couch and I'll look over and her team like won some shootout. So we're learning a lot more about this right now. And apparently Morocco just beat Spain in a shootout.
Yeah, it was awesome. When
Which
I
is
say it
nuts
was
though.
awesome, I didn't really see it because I was on calls, but I'm excited that, Spain missed their first 3 penalties. You can't do that and win a penalty shootout when there's only 5 shots. So,
That's
uh,
nuts.
yeah, it's been good. I actually have a close buddy who's been over and he's going to, I think he's going to all the quarterfinal games. So
Oh.
it's been crazy to see his videos. He'll send videos in our chat and it's amazing. Yeah. So,
So what's going on in crypto other than SBF and FTX? There's got to be something else.
What else is
Jay,
happening? I don't know. I've been thinking a lot about the SBF stuff. I was gonna tell you guys. Actually, I think I said I was gonna tell you guys before we got on the call, but maybe I forgot. I've actually grown to be like okay with SBF and what he did. Everybody's saying like it's illegal and you should go to jail. I'm cool with it now. I'm like, it's not really that big of a deal
What did
anymore.
you see that you're cool with? You're cool with poly now? You're a polyamorous guy? Is that what we're
The,
talking
yeah,
the,
you
about?
cool with the Bahamas? I get that. You're from St. Kitts. What else are you cool with,
What?
Jay?
Well, the Bahamas and the poly stuff is okay, but that's not what I was referring to. I meant in terms of like moving customer funds, all of the stuff that they were doing with FTT. I feel Like, yeah, and I'm not trying to belittle the fact that people obviously got hurt and not everybody
Yeah.
understood what was happening.
Yeah.
That is the terrible side of it. But just from the perspective of trying to understand what SBF was trying to accomplish, I feel like I'm okay with that. And part of the main reason behind it came from the conversation that you and I had, Jarrett. I think either the last time we were together on the show or the time before, when it
Okay.
was like we were talking about the fact that the reserves, U.S. bank reserves, have gone down to 0%. And so I'm thinking about it from that perspective. Well, if they're at 0%, which basically means that banks are just creating money from nothing, and it sort of like says that, we're in this place where the rules that we're necessarily accustomed to don't necessarily apply anymore. And then if you consider that what SBF and by extension the larger crypto industry is doing is for the most part unregulated, new, um and just novel in a lot of different ways, I'm okay with him taking those risks and doing the experimentation and trying to move funds around and see what kind of cool stuff he can make happen. If I'm being honest, I would say that the only mistake that I saw that happen is that he in the beginning he took money from Binance and CZ, and then at some point along the way he decided to move against CZ, and that made sense for the business, but it doesn't make sense if you're, like beholden to this person. So it's like if you have an investor and that investor is all about category X and you decide to move towards category Y, you probably need to say something to the investor and not have them find out through, back alley channels that you're going against them. And that's what I think he did. And then CZ came back and he shut the entire thing down. But if he had done what he needed to do in the beginning, I don't think we end up in this situation.
So you approve because, well, central banks do it.
Yeah.
Interesting. So you approve of how central banks behave.
I don't know if he
There's
necessarily
nothing else to
approves
like.
how they behave.
Yeah,
He's just
Yeah.
there's
saying,
nothing to compare it to. Like, if the banks do it and he's unregulated, then why can't he act like a bank?
Got it. As long as everyone knows that's what the deal is.
That's a good point.
As long, I mean, so you can do any type of agreement you want on the planet, as long as both parties are in agreement. And I don't think it was the handshake between him and his millions of depositors that said, you can take my liquidity and do what you want with it. Now, maybe the terms and conditions even said that. I don't know. Like, that's the real question. Like, A, what was the letter of the agreement? Not even the letter of the law. What was the letter of the agreement that was terms and conditions between the depositors and the company? And as long as it fit that, I also like, there's no moral high ground I have here except transparency. And if someone came along, for example, I have investors for my Wonderland investment group. And we, just a quick reminder, we dropped, I think it was like 4 of 12K in. It immediately went to like $1,000 and then below. And it looked like we're not coming out of this. So I turned to my investors and I said, hey guys, well, we're still sitting on about 6K, or I'm sorry, it was like 7 or 8K. I'm going to actually pivot our strategy to dollar cost averaging Bitcoin and Ethereum. How do you feel? And they said, yeah, let's do it. So, okay, you can change strategies, but like, are you doing it underhand, squirrely, like an overweight, undisciplined kid playing video games with people's money? That matters. I saw Joe Rogan. Did you guys see this Joe Rogan clip going around about SBF?
no,
No.
but please share.
Oh my gosh, if I had this handy. He's like, listen, and this is Joe Rogan, right? He goes, I can come on my show in a t-shirt and a cigar and act like a fucking idiot. He said, but when someone is governing billions of dollars, I don't want this guy, frumpy, overweight with the fro, looking like he doesn't know where he's coming or he's going. He's like, no, I want that guy in the tightest suit I have ever seen with cufflinks on, bald head, look like he's uptight. You want that guy running $1 billion company. It's like, I don't care if you're regulated or not. You can't just because, and this is the problem of crypto. There's Brian saying GM to anyone who thinks using leverage in the crypto space is a stupid idea.
What's up, Brian?
I
So
would
I
love
want
to
to know
hear
how Brian
and Victor talk about that, because Victor just has his he has his mortgage leveraged up on crypto somewhere.
Yeah, Brian. So are you saying that you're leveraged in crypto or no? I'd love to know.
I can't really tell what he's saying, but the smile on his LinkedIn picture makes me think he's leveraged to the moon.
But Joe Rogan has a point, and it is simply this. We have gone through an extreme nerd level underdog phase in crypto that we have got to let behind. Like, we like to think that if we have these sorts of clown archetypes running billions of dollars worth of DeFi, somehow in our minds it represents anti-establishment, decentralization. I want to see well put together CEOs move from TradFi to DeFi and go, and we saw this with Eric, the guy from Google. Eric, what's his name, joined Chainlink, right? Like, that was a profound move. The old COO of Google, whatever his last name is, I can't believe it's escaping me. Those sorts of moves were, okay, that guy's in charge of Chainlink. I don't think they're going anytime soon. And it's like, well, Grant, these are kind of superficial things. Yes, market sentiment is emotional. So I agree with you. I agree with you that I don't have a problem with what he did, but like, tuck in a shirt. I don't know, man.
I think in an unregulated space, it's really hard to say what's right and wrong. I just totally think it just comes down to how he messaged it. If everyone was on board with him taking the funds to cover, taking customer funds to cover Alameda, the stopgap Alameda, then and everyone's like, okay, cool, then you can do that. But he didn't tell anybody, and that's the fraud. That's the problem.
What are checks and balances?
I think that's fine though. Like from my perspective, my bad for cutting you off there. From my perspective, it's like, even if he didn't tell anyone, now I'm thinking this. So even if he didn't tell anyone, technically he had the ability to cover all of those costs, all of the funds that he was taking out, because he could have just created more FTT and covered the costs in the same way that they were doing before. But the issue is that CZ ratted him out and made the FTT worthless.
He did get pushed over the edge. Yeah. And so one could easily go, well, CZ, what did you do? And CZ goes, no, bros. Business is a faith game. Faith. There's a killer book I'm reading right now, and I'm reading it. I'm slow reading it. Like, I don't know how well you guys know me, but like, I can fast read a book a day. But I'm slow reading this one called Money, the unbelievably true story of a made up thing. It's a phenomenal book on the history of money. Jay, I think you'd actually really dig this book. And yeah, it's a really good book. They talk about Jekyll Island and where the central bank was formed. But if you look at how the central bank was formed, do you know why the central bank was formed?
It's after World War II.
No, before all of that.
Oh, before. Jekyll Island was before World War II?
Yeah.
Oh, the first central bank was before.
No. The first central bank happened in the first 10 years of the United States. Then it got canceled.
Mm-hmm.
And then the second central bank was like 1820s, like before the Civil War. But then Andrew Jackson got in, outlawed everything. And so in the 40s and 50s, 1840s and 50s, it was the wild, wild west. And this is where the old story goes of, at one point, our country had 8,721 different currencies. And this is what an old greenback was, is that in the South, the South issued their own money, and it all went to worthless continental, what are they called? Whatever. Continental certificates, which just ended up worthless. And then Abraham Lincoln established like the foundation of like U.S. backed currency. But the central bank then came in Jekyll Island, I want to say like the early 30s of the 1930s, give or take. But they were trying to solve this problem that our government had no appetite for a central bank. The people had no appetite for a central bank, but doing business sucked. Because which of the 8,700 currencies do you trust? Faith. And so I hear what you're saying. Like he could have just generated money with FTT. And so screw CZ for messing him up. And I think, well, but he acted like a dick. He burned his bridge with CZ. And you get your comeuppance in business. The only reason we're in business is because people want to believe we should be in business. The minute you have,
I agree with you.
And so you're right. Technically, it wasn't that bad. You're absolutely right. In fact, I wouldn't slight SBF for anything except communicating, not because he owes it to people, but because it's a faith signal. Hey, this is a normal thing that I'm doing. It's very normal, folks. And in a world where we're getting used to what is normal in DeFi.
Yeah.
And then the second thing is don't bite the hand that feeds you. Even if you don't like what they're doing, this is like trigger world. Well, I'm just going to tweet whatever because it gets the lulz. And it's like, no, these people are super powerful. And as we saw with CZ, he goes, hey, you want to play with the big boys? Act like a big boy, or I'm going to put you at the kiddie table.
True.
And that's what happened, you know? So I think the real crime is he acted like an idiot.
Yeah.
He was responsible for $1 billion. He not in the things he did, but literally how he carried himself is what I think killed him. He was a bro. I don't know. Just my 2 cents.
I have no problem with how he looks, how he wants to live his life. Like, you want to live in the Caribbean, you want to be in a polyamorous ring. I don't really care. Cool. You have to communicate, right? If you just want to look however you want to look, wear a t-shirt, that's great. I'm totally down for everyone doing their thing. I actually don't care. I think some of the most brilliant people I've ever met wear t-shirts and flip-flops every day. And honestly, suits make me more anxious than anybody. So, I only see suits now at like sad times because of funerals or organized religion, or lawyers. All things
I'm gonna start wearing a suit on the show.
Please do. Please show up in a suit. So I'm actually fine with that. My thing is, I just actually don't think he really knows about crypto. And this goes back to about 6 months ago, and I'd have to find the audio clip, but he was on a Twitter space or something, and somebody had asked him like a fairly basic question, and he just couldn't answer it. Like he just didn't answer it properly.
What?
Yeah. And I remember thinking that was really weird. Somebody like pointed it out. It was like, Sam Bankman-Fried doesn't know anything about crypto, but it was kind of like a joke because he's also like a crypto billionaire. And I just think it like reminded me that
interesting,
the people that are in charge of these things that you look up to aren't always the people. Like Elizabeth Holmes, right? She was a college dropout. She had like 1 or 2 years of undergrad underneath. She never really probably even took organic chemistry. She was just able to like pull it off. She was actually probably the best project manager in history. She just pulled the right people together and had the right conversations, you know? So when I think about SBF and just some of the things that he said, I don't know. I think that there was red flags for him, and I'll find this clip and I'll share it with you guys and I'll share it with everyone here on our Crypto Bros. But I just remember listening to that. I'm like, that's not good, because if you're like my buddy Drew, we'll be watching professional soccer and somebody will just, you know, kick the ball 15 yards over the goal. And he'll say, oh, I can do that. And like, as a joke, like, you know, I can go out there and miss a goal. That's easy to do. And I kind of felt like when I heard SBF say that, like, I can do that. Like, I can not know things, you know, but I'm not in charge of anyone's money, you know? So for me, I don't care about how he looks. I don't care about his lifestyle. I just want to know if he has the acumen to be able to do this. And I think people should have been a lot more stringent about his acumen and his ability to actually run a multi-billion-dollar centralized exchange. Because I don't think it's easy. I don't think it's easy at all. And
who do we know in this space that is the full package to manage a Web3 company? Who do we know?
So the Web3 company is different than a centralized exchange. I mean, what he was basically doing was running TradFi. I don't even see it as decentralized finance. Yeah, he had decentralized finance products, meaning crypto, but like what he was doing was basically just running like a TradFi bank. So I think it's a little bit different. Like I don't think he could have pulled off an NFT project. I think he would have been destroyed in Discords and Twitter Spaces because they would have just put him to the sword. But I think he was able to like hide behind VC clout and VC money. It's always easy to see these things in hindsight, but and I've now heard him in multiple interviews, and I'm like, dude, this guy is like, he's just not he's not the one I would want to trust with my money. Like, I don't even think he has a grasp on what's going on, Anyway. But that's a really good question. Right? Who in the space has the ability? Is it even CZ? Right?
Is there even anybody in the space who can?
There's no one. Like it's too new.
I don't think so.
So unless it's someone coming from the TradFi into it and then just offering the products, that's why.
I can't imagine that somebody good enough on the TradFi space is going to say, yeah, I put 20 years into Merrill Lynch and now I'm going to go trade Bitcoin for a living. You know what I mean? Like that doesn't make any sense.
Why doesn't CZ cut it?
Does he come from finance? I feel like he came from tech.
Well, I don't care where they come from. I mean, capable. Like, you're right. Like, it doesn't matter what they look like. You're right. I mean, but can they manage it? But what you're saying is he didn't have any side of the package. So, like, you could be a Bob Iger and not know much about crypto, but you're at least putting forth the image of faith and certainty behind finance, which is the first thing that has to be established is faith. Do I believe that this thing is a good steward of my money? And so if you don't know crypto, okay, well, at least bring something else to the freaking table. And the suits, for all the angst they cost me too, but we don't have much other experience. But in CZ's case, he is from the technical sector, and I think he has a very strong technical grasp of crypto.
He did work for like a trading desk prior to founding the exchange, but I don't know if he had like enough experience to be like, maybe he's got enough experience to say like, okay, I used to work for a trading desk, I'm going to start my own trading desk, and that's how Alameda gets there. I don't know if those pieces of experience equate being the CEO of an exchange.
And this is a real problem, right? Like to me, the real problem with crypto, that the next hurdle that crypto will have to overcome is faith. I mean, people have lost their money. Go ahead.
And this is the problem, though. Crypto is all about don't trust, verify. Don't have faith, verify. So I think the future of exchanges is already what's happening now with Coinbase and Binance. They're coming out and saying, we have this much money, customer money, and we have this much reserves. And this was always going to be a little bit higher, so you're not stressing out about it. I really do think that that's like the future. I think the future of centralized exchanges are going to be more and more decentralized as time goes on. They're going to use a brand, and then they're just going to be all automated. And they're not going to offer any yield, and they're just going to be places where you can go turn your fiat into, they'll do your KYC, they'll do the AML. They're going to cut down on all these deals. They don't have to have like this idea of like the marketing that we do, or like, my NBA team is the Bank of America Center. And all of a sudden I'm like, oh, well, I love this NBA team. Let me go bank at Bank of America. Like, I'm just that for me, I know that mass populace, like, oh yeah, they see that. It's like a small thing. Oh, Bank of America is trustful. I don't know. I just see the future, like no more Coinbase everywhere. Coinbase should really thin its herd. Just offer crypto through KYC, AML. If they want to be a public company, they should do that. They'll get their money on the fees, and that's it. Stop offering yield. Anything that offers yield now, I'm stepping away from. This whole past weekend, I've taken everything off almost everything off exchanges. I just trust no one anymore, because it's not about trust, it's about verifying. And I think we all had too much faith in Sam Bankman-Fried, because anyone who had crypto wanted to be Sam Bankman-Fried low key. They wanted to use crypto to be the good guy, to change the world, to be someone that's approachable. Because for most of us that have crypto, it's not an approachable thing. Our friends and family don't understand it. And we don't have enough money yet to change the world and to be to be like the crypto philanthropist that maybe some of us want to be, with this idea of effective altruism. So for me, like moving forward now, I just think Coinbase should fire everyone they need to, other than just keeping the thing going, running KYC and AML. Most of that's done through AI. Offer the on-ramps take a minimal fee, take that money, pay your people, and then invest the rest of it in crypto, as Coinbase is already doing. They have a pretty nice investment wing, but that's it. Don't get greedy. Don't get greedy. Keep it super simple, because like once you start offering yield, the thing falls apart. I had money in BlockFi because it was offering yield. It fell apart. You know, the thing that the guy who he's a Bitcoin maxi and he came on my podcast, he said, and I it sticks with me all the time. And it's basically what Saifedean has said in his book, The Bitcoin Standard, is that like in a hard money system or in the Bitcoin system, you can't create more Bitcoin. That's it. Right. But in the fiat system, imagine if all the fiat in the world was just $1,000. That's all we had. Right. Then you can't so like he was basically explaining how we print money. You know, it's like, I'm going to lend you, Grant, this money for $1,000. So I'll give you $1,000. Right. And I want 7% interest. But if there's only $1,000 in the world, well, now we got to go print $70 so I can give it to you. And that just is what happens in the fiat standard on such a large level, you know? And
have you read Atlas Shrugged?
No, but anyways, I'm trying to bring it back to earth. And I really just think the future of centralized exchanges are going to be leveraging these brands that are going to be around. By the time you get to 2030, Coinbase will have been around almost 16 years. 18 years. I think it started in 2012, 2013, 2014 is when Coinbase started, more or less. So by the time you get to 2030, you're going to have a 16-year-old thing. Everyone will have heard of Coinbase. Most people already have, their app in their phone. People will be using that like the way we use Venmo right now in the United States. And I just think it will be super stripped down. And
interesting.
It won't have all these like crazy things. They should shut down their NFT. It didn't work anyways. Let somebody else do that. You know, that was a shiny object they chased and it didn't work out. But anyways, that's my take. I just think long-term, it should get away from these egos running exchanges and it should get back to the verification, trust. So you don't trust, verify. Because that really is that like why I like crypto so much, because I don't trust the banks. Well, Jay and I were talking about like they have if I go say, hey, you have 30,000 of my dollars, I want them all out. They're probably not going to give them to me. You know, that's insane. If I want 30 ETH off an exchange, though, done into my ledger, done. You know, so until you like, I'd like to see crypto be something that's not TradFi, and we're still not there yet. We're still like, obviously we're so far away. I think we're still following the same rule book and the playbook, but I would like to see all these exchanges get away from the egos. Gemini, I think, is going to be Gemini's right now in a potential problem. It's shaky. And that is built off the Winklevosses. They wanted to create a place and do that, but they started doing a bunch of yield. They started offering 8 to 9% on their GUSD. What does that mean? It means they have to print more of it. So they got into crypto because they understood what Bitcoin was, and yet they go basically create a fiat, a fiat synthetic product, which is their Gemini US dollar. So I just think the more crypto tries to be TradFi, the quicker it's going to fail, because long term, TradFi is doomed. Like long term currencies, they boom and bust. So yeah.
Do you think the promise of crypto reflects human nature?
What?
So, well, I guess you talk about like printing money, adding money and removing money. Like that's the crime. That's the crime of central banks. They can print money and remove money. Criminal. And most of this actually goes back as far back as like Wealth of Nations. And they were talking about, everything was like gold standard at the time, like we're proposing Bitcoin is. And they got caught at the governmental level where they saw all of their gold flowing to other countries. And so they saw their $1,000 of gold dwindle, and they're like, oh my gosh. And because there was very little cash flow or very little resource of gold, they noticed that production, the human nature is to seize up production. And so on the other end of this, if your standard is 1,000 gold and suddenly influx from other countries is, another 100 gold, another 200 gold, and you start seeing your gold pile increase and you start lending that money out, suddenly you see the average person innovate. Suddenly you see a boom in business growth. Now, there will be an inevitable contraction to that, but this idea of inhaling and exhaling was learned even back then, that, wait, no, you need a fluctuating money supply. And I know where inflation comes. Whoa, bro. Are you Morse code signaling? What in the world, party mode? We understand what's going on with inflation. We understand that it's out of control. But when I think about like not offering any sort of returns on money, like there's no returns on money, and like that's the ideal. And I think that creates no incentive for the average mind. For the far-reaching, future-oriented, growth-oriented mind, yeah, just enough people got to be born, and then just, Bitcoin's got to be limited, and then there'll be fewer Bitcoin to go around, more people, and so that creates higher value. And so you've gotten all this growth value, and it's like, yeah, that's a generational play, which is great. And it's not even guaranteed that that's the outcome. So I guess I sit here and I think, what about and things like anonymity, things like that are already proving to not, that for the average user really doesn't care about. I guess I'm asking, does crypto, the average current promise of crypto, instantaneously pulling out of my bank versus pulling my 31,000 out of the bank, do people care? Does it resonate with human nature?
But what's human nature? I think you need to define that.
And the promise of crypto, I feel like, has changed as well over time.
Yeah, I am getting at that too. Yeah.
Yeah, because I think you're saying Bitcoin and then you're asking me about crypto, and they're two separate things. So can you say, are you asking me about Bitcoin and human nature? And if so, what's human nature?
I guess I'm not just necessarily Bitcoin, that is a for instance, but I would say that the longer we go talking about crypto, the more we're talking about, as a standalone industry, the more we're talking about cryptocurrencies specifically. Because crypto tech, I fully believe, is just going to get absorbed into TradFi through the lens of technology, because blockchain technology is legit. I think you're already seeing it mainstream, and they're not even having to bridge. They're just building up their blockchain departments internally for blockchain-driven technologies. So the longer we go talking about crypto as its own standalone thing, we might be talking about gaming, but I think generally we're going to be talking more and more about cryptocurrencies. And if we're talking about DeFi is going to hold on as long as it can. But I think that the human nature, okay, so yes, to answer your question, I'm talking about DeFi. Do you think cryptocurrencies or Web3 DeFi lives up to the promise, or does it contradict with human economic incentive, human nature?
So in order to answer this, we have to live in a world that we don't live in now, and this is really hard for us to do. And Saifedean talks about this in his book, the Fiat Standard. And I'd actually like to read from this on Saturday. I could go get the book and putz around and find it, but I want to be present here. But basically, he talks about the example of right now you buy a home, and you buy a home for $500,000 in America. And the reason why you do that is because you are sick and tired of paying rent, and the story has been told to you that you might as well own real estate. So you're going to buy a home, whatever. Okay. Now you're paying in, let's say, $2,000 a month to your mortgage, and in 30 years it will be yours. You'll end up paying $750,000, $250,000 more, but you were able to borrow money. You put your down payment. So 30 years go by. You've now put in $750,000 into this home. It's yours. And the market will say how much that home is worth. It's probably going to be worth more, especially if you're in the United States and you're in an affluent place with good schools, good hospitals, good roads, good infrastructure, and that's safe. Probably worth $3 or $4 million. Like that's easy in 30 years. We are used to the financial incentive on the fiat standard being one of, we're going to get more tokens. We're going to get more dollars, right? Because the fiat standard is inherently inflationary, right? Meaning we have to go continue to print more money. In the example of anytime I loan money to you, then I have to go print more. Like it just needs to continue to like a balloon, right? This is why things cost more over time, basically because the fiat standard, like it's baked in inflation into the game we're playing. This is why my aunt, when I was a little kid, said she went to Fenway Park to watch the Red Sox for 5 cents to sit in the bleachers. If I go now, it's about $65. So the value I get is no different than the value she got. You get to go see a pro team play. It's fun. It's warm out. It cost her 5 cents. It cost me $65. This is because the fiat we've printed more of it, right? Therefore, things cost more. So on the Bitcoin standard, and once again, Saifedean outlines this, and if you stick around to Saturday, I will totally read from this, but he says, imagine buying a home for $500,000, but it's in a deflationary system where in 30 years, my home will only be worth $200,000. But each one of those dollars will have way more purchasing power. That is the Bitcoin standard. And if you just think of it like that, if I take 500, let's say I just take 50 Bitcoin, each Bitcoin's worth $10,000, and I buy a home, and we're on the Bitcoin standard. In the future, the home may be only worth 10 Bitcoin, right? So it's gone down, but those Bitcoin are now worth $5-10 million each. That is a different way of looking at incentive over the long term. And I will find a better example where he breaks this down. But the basic idea is that if you live in a deflationary money system, which is basically what Bitcoin is, as opposed to an inflationary, you're so much more incentivized to save. We live in a world right now where we are incentivized to spend because you need the economy to continue to whir, right? And when you do that, you cut down on the ability. Like he talks about how, if you're incentivized to save, and people used to be, and this is why your grandparents will probably tell you to save because they don't believe in investing because their money used to hold value over time, right? If you're incentivized to save, the economy over a long period of time will be stronger. It will be better and it will be more equal among all people because anyone can go save, right? If you just put money, if I put $10 underneath my mattress and then in 30 years, it's worth more. It has more purchasing power. That's so much easier than having to figure out investing. Investing is super difficult, right? Investing is an inherent risk game. But if I can just keep things underneath my mattress and then they're worth more in the future, that's just such a better game. So really Bitcoin is the best saving system. And the incentive is to get it through your work, through your labor, however you're going to, make your money or make your Bitcoin, and then you just hold it. Right?
Interesting.
Because right now we live in a world where the towers fall in 2001. And he talks about this example because I think it's very selling because I remember it. Towers fall in 2001. And what does George Bush says? He says, go out, everyone. Go to your local store and buy a TV. Help America. Consume. Because the fiat thing is just a Ponzi scheme and you have to keep putting in money into the system where it dies. That's a messed up system. And because of that system, the money will eventually go to the 1% while the 99% get totally abused, right? Because they can't hold on to their money. They don't know how to invest. The average human being does not know how to invest their money or even look at like an investment chart. So they're not going to do that. So then what are they going to do? And I'm going to use the United States as an example. What do people in the United States do? The United States, one of the reasons why it's so powerful is because it has a big middle class. The big middle class was all made underneath a gold standard. The second we turned into a fiat standard in the 70s, now we have inequality that even rivals many developing nations, right? So, and on the fiat standard, now all of a sudden all the money goes to the 1% as opposed to being more spread out because all people have to do is save their money underneath their mattress and give it to their grandchild. If my aunt had saved $2,000 and gave it to me now, and that was her life savings, and she was born in 1907, it wouldn't have done anything for me. What's $2,000 going to do for me now in generational wealth? Zero in the fiat standard. If I give to my nephew now, who was just born, Luca, 1 Bitcoin by the time he's 50 years old, it may change his life. It may be the thing that he'll just live off that. He'll just live off that. So we have to think in different incentives. We live in a world where you want to have growth, and the growth is measured by getting more of these tokens. I'm saying the tokens will be more valuable and they'll get you more. And that's a world we just don't live in.
There's no guarantee of that, though. There's no guarantee.
Absolutely no guarantee of Bitcoin working. But
and I guess this is the human nature thing that I'm asking, because like the assessment of the inflationary nature of the fiat standard, I don't agree with the assessment. I'll have to read these books, obviously, but like we did not have a strong metal class under a gold system. I don't know where that idea is, not from my study of history, but I'd love to see there. I'm sure there are pockets, but the hypothesis though of yes, in a deflationary hypothetical deflationary system, life would be so grand. But I personally am of the opinion that the fiat standard is a natural human evolution, because even before we had the fiat standard, we were on the gold standard. Gold itself became inflationary. It was prone to much slower supply back then. That the slowness of the change in supply of gold, you could say, was on par with the production of gold, with production of Bitcoin. It was very slow, nearly to be fixed around the world, but demand was growing, and so there was deflationary natures are human nature. I believe deflationary nature is human nature. Whether it was puka shells or salt, at some point there's money expanded, got hoarded, some got pulled off the market, some got thrust into the market, and these mechanisms of supply and demand of a resource kept going. In theory, yes, Bitcoin absolutely, in theory, on paper, should that vision come true, I believe in the mechanics of what you're talking about. But this is what I'm asking about human nature. Like won't humans self-sabotage that?
Well, that's the thing. You can't self-sabotage Bitcoin. You can't speed it up or slow it down.
You can just not use it.
You could just not use it. You could just not use it.
I mean, like when I think about the CBDCs and I think about our country and our government and this insecurity that everyone who lost bags in the last market downturn because SBF can't be trusted, and how many other silly clowns that were running DAO projects and just let these money slip through their fingers, we're butthurt. We're going to go boo-hoo and we're going to beg for regulation. That's not a grand conspiracy. That's a heart conspiracy of humanity. We're just like, I want safety and security. So I guess I actually want to believe in the Bitcoin dream, but the more I look around at the average human nature, the average human's ability to like get my hand burnt and go, I wonder what it's like when I touch an oven. It's like, we just did this. And they're like, well, I don't remember. And do it. Go ahead.
Yeah. Well, first of all, I could talk about this all day, because clearly this is like my long-term thesis. And this is how I was just doing math the other night. And I just think that this is the new financial freedom, and it's a joke because it's sitting right there, but it's not apparent. You know, the most simple things in the world, we as humans complicate. But Jay, what are you thinking? You look very pensive.
Yeah.
I'm like listening to y'all. I'm trying to figure out, like, I think a lot of you both have like a lot of conviction for where this market is going and what eventually is gonna come of it. Partly in my mind, I'm still thinking like, like the whole thing could just fail. Like this could just be like a really bad experiment, in like 100 years from now, when our ancestors are looking back into our history and they're like, yo, these guys were trading what? Bitcoins? What in the world is, like it could go completely in the opposite direction. So I guess like you were saying, Grant, I think it comes down to faith, right? It's like what you believe in.
Yeah. The adoption of Bitcoin comes down to faith. I'm talking about the mechanic of it has nothing to do with faith or trust. It comes down to verification. And that's why it's a really powerful thing that I think people latch onto. And Jay, you're totally right. Like by 2050, they may look back and my like nephew's like, oh yeah, well, I don't want to talk about my uncle. Like that dude lost everything. He bought Bitcoin. Oh my God, he bought Bitcoin. It will be like the Fire Fest, right? It will be like that insane.
Yeah, man.
But I think in a world that is just so globalized and so into tech, tell me why they're changed. Tell me why in the world of Star Wars they're using fiat currency, right? They're using some digital currency. I think we can all agree upon that. And
Do
then
they use fiat currency in Star Wars? I don't.
No, I'm saying I'm creating a
Oh.
hypothetical
Oh,
from a
okay,
fictional
okay.
I was
movie.
actually thinking
I'm
of like,
trying to
well, on
remember back
Bespin,
to, like,
they were
what-
using.
No, I'm just
Nerd
trying to say,
alert.
you know, like everyone's like, oh, let's go to the moon, let's go to Mars, let's like colonize these planets, let's do all these things. And I'm like, do you think they're still having ATMs? And do you think they still have overdraft fees? And do you think you're still gonna get a little piece of plastic that you can put in and you put a pin in and then they give you some more of these Chuck E. Cheese dollars? You think
Yeah, they're
that's what's gonna happen when we're
Empire credits.
literally
Yeah.
all neural linked and flying around on our drones? No. We can all agree that it's going to be a digital way that we transfer value. That to me seems like simple.
I
Now,
agree
whether
with
that's the CBDC,
Yeah.
first of all, I'm with Lynn Alden, who has the hybrid theory, where and I'll actually add on my own theory onto this, onto Lynn's, but Lynn's talks about the hybrid theory, and I don't believe it's hers, but it's the idea that like in the future, everyone will have Bitcoin and then some digital fiat currency, some CBDC. For me in the United States, the imperial credit value doesn't add up exactly. They went bankrupt when they made the Death Star.
See, George knows the imperial credit, man.
Yeah, they went bankrupt. So, but I and I said this the other day, and I'm a firm believer in what I'm about to say. So that in about 10 years, 10, 20 years, we'll say by 2040. I mean, that gives me enough launch pad where I can be wrong for a while, but still maybe be right in the future. There's going to be just Bitcoin, and then there's going to be a handful of CBDCs. The European Union will have a CBDC. China will have their digital yuan. There'll be the US CBDC, and basically everyone else on the planet. And this is me adding in. This is now me adding in my opinion. Everyone else on the planet is going to play by those rules. And you're not going to have anyone in this hemisphere is not going to have the digital yuan. And if you do, it's going to be super, super looked down upon because the United States, since the, I think the Monroe Doctrine has basically said the Americas are our background. We protect them. We get to do whatever we want. See a history of Latin America, corruption, government overthrows by the CIA, etc. But I do believe that that's going to happen. So when that does happen, I think Bitcoin will be the one that people will basically put all their wealth into, and you'll use the CBDCs every day to buy groceries and everything else.
Interesting.
Yeah. So, but
Interesting.
long term, you're totally right. Like there is some level of faith, but I also think in a globalized world where there's so many people being dislodged and internally and externally having to move around and they have to put all their wealth into something, well, they're going to put it into something that they can carry around from a seed phrase in their head and no one can steal from them. And we've never, ever had that. Wealth in like the 17th or 18th or even 19th or even 20th century was all about what you had, how big your house was, how nice your car was, how many physical things did you have? And now we've evolved beyond that, which is super exciting for me as a physical minimalist.
Yeah. The liquidity is, I think, and I'm not talking about crypto liquidity pools. I mean, velocity of money, the speed of it is the number one argument for crypto today, and mobility. And in fact, we're talking about mobility. Nearly every innovation in money has been, even including digital, a mobility issue. Like there was a story in this book, Money, the true story of a made up thing. At one point in Holland, I think, they were trading copper plates this big, and they would strap them to their backs, and that they would, when they would travel way down with their money, literally. And so the idea of paper money was like, oh, hell no. How could you trust a paper note, a bank note? And when someone said, well, no, there's a bank branch where you're going, and I just turned the note in, and that's it. And that's actually what got Genghis Khan and all those guys going. So like this isn't a continuation. So that vision of a hybrid future, I would tend to absolutely agree with, where most likely Bitcoin, because of established avenues, period. I mean, just as established avenues of going, okay, here's my CBDC, but now I'm a Ukrainian. I got to find a new home in the world, or we're going to go live on an asteroid because we're volunteering to go mine titanium. Whatever that is, we'll probably find a moment where we'll liquidate to Bitcoin until we get to where we're going, and operate. I do believe in that. And I guess part of my thinking is also from the aspect of an investor, and coming from the aspect of the investor, this idea of one in the hand versus two in the bush. And it's weird mix up where some days you're just a naive optimist, like, shit, let's go stellar, like XLM to the moon, baby. Like that's going to be the deal. And because there's so many good, heartwarming, like international aid stories with Stellar and stuff. But then other days where you're having to be a staunch realist and go, that will never happen in my lifetime, or at least soon enough for me to profit from. And like one thing we always think about, and I was thinking about this about Bitcoin, is what's the exit strategy? If I hold until when when is the liquidity or the velocity of that enough that I can actually finally buy a beer with that Bitcoin that's been growing to 1 million for the last 10 or 20 years? I can't do it with my gold. That's why I don't hold a lot of gold. I mean, like the conversion by the time my gold appreciates is nuts. I'll convert that. Bitcoin would be much easier, obviously, granted. But like when I think about exit strategies, it's like I only have one current exit strategy on Bitcoin, and that's holding it till it hits a dollar amount. How much is enough to start liquidating? 100,000? Well, no, it's got to go to 1 million. Okay, at 1 million, like when does that money do something? And if something grows forever, yet I can't do anything with it, then it actually has no wealth. And so I assume there's probably going to be finance models, just like real estate, by the time we hit some of these halvings and that number really starts running. But like, well, what if it drops again 80%? Like that's what it's going to do. Every halving, it's going to dip a little, then take off, and then drop 80%. And that's going to be what it does. So when I think about that versus real estate, just putting on my investor mind, I go, oh man, like my properties are a bank for life that someone else is paying for. And I don't know how to create that in Bitcoin. Does the investment now? Let me ask you this, Jarrett. Have you been a growth investor long before Bitcoin? Have you always focused on growth only?
Yeah.
Really?
I've done, and to be fair, before
That's
this,
interesting.
before getting into crypto, I'd only bought, a select number of stocks. Crypto was really my introduction. I was never very interested in the traditional stock market
Interesting.
at all. It just, none of it did anything for me. It didn't, none of the narratives called to me. Even Tesla, my father got in really early on Tesla because he was one of the
Oh,
first people to have a
wow.
Prius in the United States. He was on that waiting list like long before, because he was like, oh yeah, this is it. I understand this is going to be it. Like we're going to be all,
Interesting.
and so now the fact that like we have solar panels in the house and you plug the car into the house, so you're basically riding on sun. That's kind of fun.
That's cool.
Um, yeah, I mean,
But the
I've always
narrative
kind
just
of,
didn't grab you.
yeah, I've always had an extreme ability for delayed gratification when it
Yeah.
comes to, like I tell anyone, like Gary Vee tells this story, and it's funny, we have the same story, but I have, I have shoe boxes full of McDonald's toys that are unopened from when I
Oh
was
my
6
gosh.
years old. Do you know how hard it is? And I know 6-year-olds now. My buddy's like daughter.
Yeah,
Do you think
yeah.
she'd wait to open that? If she did, I think she's a psycho. But
Yeah,
that's what
yeah.
I did. And I stacked them. I'm like, no, these are gonna be worth something. I don't need to play with them now.
Were
I'm
you a
fine.
shoe head too?
I'm good. What do you mean a shoe head?
Like, did you collect shoes? Don't crease them. Don't take them out the box.
No, no, no. I'm not a sneakerhead. I'm not a
Oh, yeah,
sneakerhead. My
yeah,
buddy's a
yeah,
sneakerhead, and yeah, he like won't get out of his truck, and he puts them down
yeah.
on the floor. It's ridiculous. But no, I think I think you're spot on, and I was thinking about this last night. But let's live in a world, and I believe
Mhm.
this, and I've now created a podcast on it. If anything, honestly, just as like timestamps to say I said this, like creating a podcast really at some level for me is just becoming like a
A
timestamp
journal.
thing, so I can be
Yeah,
like, hey,
yeah.
it's public. I did say this. I'm not crazy. But if Bitcoin gets to $1 million by 2030, before the 2032 halving, and then probably gets to somewhere between $5 to $10 million per Bitcoin by 2040. This is at a point where basically currencies are just collapsing and things are just kind of sliding into it. I think real estate is going to be absolutely rocked over the next 5 to 10 years in a lot of developing nations as climate crisis is going to run its course. I think other sectors are going to be just sucked into it as well. I think when public companies realize they don't want to hold dollars on their balance sheet and they want to hold Bitcoin, it's just going to be like, not, it's over, right? The second BlackRock decides, we'll put 5% in, the thing doubles overnight. So if you live in that world, let's live in the hypothetical world where it gets to 10 million by 2040. At that point, you've won Bitcoin. You just take out $100,000 for the year, or whatever you're going to need in CBDC, you sell it, and that's it. You're going to pay short to long-term capital gains because you've been holding it since 2022,
Yeah.
and so that's going to be the new generational wealth. you know, and there are already products out there where you can buy. There's a product out of Florida, and I think we've talked about it here on the show, where you can leverage your Bitcoin to buy a house, where you'll say, instead of putting my down payment being $100,000, I'll use the equivalent in Bitcoin. And now I believe that the interest rates get kind of funky with this, because obviously if that Bitcoin that you're using to leverage goes down to only 50,000, you may actually have to pay more. Like, I don't exactly know how the mechanic of the mortgage and the variable, it's probably a variable rate, but the cool thing about that is you actually get to keep your Bitcoin. It's put in like a multi-sig wallet or something where they can access it if they need, if you basically, don't pay your mortgage and then they need to collect their collateral, but otherwise you get to keep that. So at the end of the day, you could be keeping you could get a home, which is what is part of the American dream. And many people around the world want to own their own home. That's a dream for them. And you also get to keep your Bitcoin. So that's something really interesting. And I think at a point where it makes sense, I may engage that, because if I ever do decide to buy real estate, I would definitely like to do it by leveraging Bitcoin. So
interesting. Interesting. Sidebar, fun fact. On the last show, we brought up that website where you can track the CBDC programs around the world, the CBDC tracker. Did you guys look that over at all?
Yeah, I saw that.
The thing that jumped out at me was that there were two currencies that were canceled, one in Ecuador and one in Senegal. And there is a rather robust research paper on Science Direct on the rise and fall of the Ecuadorian. And get this, it ran as early as 2014 and closed as early as 2018. And it closed mainly because of liquidity issues. It's a very interesting cross-border payment situation where they couldn't get it to replicate one of these things, specifically replicate the current, even then in 2018, adoption of Bitcoin itself. Very interesting article. I can send that along to you guys. Interesting.
Yeah, please send that along. And I'm going to actually, I'll put this up on Not Crypto Bros, so make sure you're following that on LinkedIn. But I found this image the other day and I just thought it was interesting because it's talking about adoption rates. It has the lows in Bitcoin for the last decade. So from 2012 to 2022. And in 2012, the low for that year was $4. In 2022, the low thus far has been $15,600.
Wow.
Ridiculous. A lot of times we talk about, what's been the high of the year? No, this is looking at the lows. And I think that that's a very interesting. Yeah,
that is an interesting number. And then I'd like to look at other numbers maybe on our next call, like you were talking about wallets, and just saying it on camera for posterity. I'd like to look more at that. What's your shout outs? This week? I think we put Jay to sleep.
Oh no, I'm with you. I was actually thinking about the shout out. I was thinking, Jarrett, you mentioned Elizabeth Holmes earlier. Fun fact, did you know Elizabeth Holmes, her father was a vice president at Enron?
I didn't know that.
I did, and I was watching the Hulu, the one they made with the actress, and she's honestly like a better Elizabeth Holmes than Elizabeth Holmes. And I remember when he gets laid off from Enron, and I'm like, yo, this shit's too crazy, because you have Enron, which is like one of the world's most notorious, they have that documentary, The Smartest Guys in the Room, and then her dad's tied into it. You're like, you can't write that. And then the woman inventing Anna, that woman, Anna Dubarsky, whatever her name is, he was like chilling with Billy McGrath in his in his penthouse that he had for his little card, Magnesis. So it's like somehow these people attract one another. It's like, it's next level to me. It's so next level.
It is. Yeah, I was going to say, just like positive attracts positive, man, crooks attract crooks. That's just how it goes. And maybe it gives them permission. Maybe it gives them permission to have more gray area than the rest of us. Like, well, like to Jay's point, people get scammed because they want to be, right? Like, By
the way, Jay, I'll say it on screen. You now have a lot of red flags. You said people get scammed because they want, and that you're okay with everything SBF did. It's quite the vibe for you to have on your digital resume.
Well, I think that connects well with my shout out. And so shout out to everybody right now who's operating in the gray area. It won't be gray forever, folks.
It won't be gray forever? What dystopian film have I stepped into?
Oh my gosh.
It can go either way. It can go into the black or it can go into the red.
It could go either way, guys. That's too funny. Or no, I'll go. Shout outs. Shout outs to this dialogue. This wasn't our typical crypto dialogue, but I personally am really pressing into investability right now. And some of that is the imposing, overwhelming conversations everyone else is having about the recession coming. It hasn't started yet. All these messages, and I try to gird myself up with optimism, believe it or not. And sometimes to do that, I try to break out of my normal ruts of thinking and tease out other thinking, like, well, should I just liquidate all this and get into real estate, or should I move this into bonds that move against the S&P 500? And I don't know. So I appreciate you guys and Jarrett specifically for kind of handling some of my skeptical thinking as I process this. So that's my shout out.
Yeah, we'll be live again this Saturday at 6:30 a.m. So go ahead, get up early on Saturday, get a cup of coffee, and join us if you're especially on the East Coast of the United States or in North America. We'll continue, and I'll have a reading. Well, I will read out from the
reading.
I'll have a reading, so you guys can get cozy, and I'll ASMR you to sleep. I'll read from Siphone's book where he talks about the example, because maybe I probably butchered it. But go ahead and follow us on Twitter, YouTube, and LinkedIn at Not Crypto Bros. You can check out our website too at notcryptobros.xyz. And we will see you on Tuesday at 6:30 a.m.